Hello traders, Andrew Curry here, and if you haven't already done so, check out my website, link in the description below, and you can sign up to my free trading newsletter. In the meantime, I'm going to share with you for this video a clip from a recent free webinar I gave where we discussed about traders moving stops and what you can do about it. Enjoy. Entering here at the blue line, entering bearish, let's say, and red for a stop loss up here, and where's the green? Let's do green for a target down here. Okay, that would be a nice trade. Give us a nice risk reward. It looks roughly double. It looks roughly a 2-to-1 risk reward in our favor there. So that's a good decent trade to take. How many traders have? Oh, I can't move this line. Good. Right. So how many traders have been trading? Get back to my yellow. They've entered here. Oh, hang on, give it here. They've entered on this line, and it moves into the negative slightly. And it moves a little bit further, and then maybe it moves a bit down, and then it moves into the positives. You think, oh, yeah, okay, that was just a momentary positive. But then, we have all the choppiness. It does this, and it gets to here, very close to the stop loss. And the trader thinks, oh, if I stop now, I've lost all of this, and I haven't won anything, so it's a negative. And what do I do now? Tell you what, maybe I'll just move the stop back a little bit. Make sure no one's watching, and I'll just move the stop a little bit. Yeah, quiet. Make sure nobody's looking. We'll move the stop back here. Guilty, Eddie. Very good. You've confessed. You've admitted that that's what. Yeah. At the very beginning of trading, I went through that exact psychological phenomenon of I'll just move it back a bit. Just back a bit. Because I'm gonna kick myself if I put the stop loss there. And then the market does this. Yeah, just a little bit over, stops me out, and then it goes bang. And you think, oh, if my stop had been just a bit further away. Oh no. So tempting. And a lot of traders and people teaching trading and so on will say, no. Been there a few times, yeah, Robert? Yep. Good on you for admitting that, because some people just would, oh, no, of course, I would never do that. Because, of course, we hear, never move the stop loss. And I agree, you should never move the stop loss. But it's understandable why people do. And part of the reason is that the trader entering this trade, for whatever this trade is, this is just squiggly lines. It could be any trade at this point. But in this bearish trade, we enter here on this dark blue line. They're not psychologically ready. When you see the break trade, take trade down, how do you mean? When it breaks the stop loss, it should kill the trade, you mean? Do you mean trade in the opposite direction once you violate the most recent outside return? Take a new trade. Well, yeah, okay. The trader may have a strategy where they re-enter the trade or enter into a different trade under different circumstances. But I'm trying to just simplify this really in principle to just say, that's why at the minute this is a hypothetical trade where for some reason we had a valid reason to enter here. We had a valid reason to take our profits here, and we had a valid reason for a stop loss there. And what I'm getting at is the psychology of if we just move the stops back a bit. It's just like a hypothetical scenario where this is where our stop is. And psychologically, we're kind of not ready to accept that, especially if we've all seen it, a trade where stops you out by a few pips and then it goes bang, hits the target. And you think, oh, if I'd have just moved the stop loss just a tiny bit, I would have made money. Instead, I'm now looking in a negative. So psychologically, that's what I'm looking at. Just the principle in general more general than that, of not moving the stop loss. And people say you should never move your stop, no, under any circumstances. And I agree. But it's easy to say that. What happens is people are psychologically not ready to accept I'm ending the trade at that point. So by having a logical place to there we go, this place here. Let's just get rid of my squiggly line drawings. Way gone, clear. Right, so by having a place where we psychologically are ready to accept, if we cross this point, my initial prediction, call our prediction in this case, was that it may continue on for a bit, but that we'll, let's go with the blue, but that we'll enter, say, here, and we would have a target down here, let's say, okay, and ultimately we're playing for this move, which in my example, of course, when the trading educator gives an example, it always works perfectly. By saying, okay, if instead of doing that, the market does that, and therefore our initial prediction that the trend would continue on, at least to the green line, if not further, we have said our prediction has been invalidated. We have a point where we can have a logic behind the existence of a stop loss at that point. By having a logic to the stop loss, rather than just looking, saying, well, I don't want to lose too much, so I'll put it here, it is much easier psychologically to accept the presence of the stop loss and not be tempted to move it just a few pips, just in case, because before you know it, it's up here. And we've taken more than twice the risk, just looking at it quickly there. So we want a point at which there's a logic behind our stop loss, where we're prepared to accept we had a confirmed trend, in this case, bearish. And we want, if the market exceeds this price point here, our analysis, our prediction has been invalidated. And therefore there is a logic to bailing out of the trade now, because our initial reason for entry is now invalid. Does that make sense? And does anyone have any questions there?